Hi, I'm Mark Rossano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network. So today we have our econ show. We're going to break it into our 5 different segments. So the 5 segments that we have, in segment 1, we're going to talk about the IMF and how they took down growth estimates, increased inflation estimates. But one of the things that we've been saying is that there's still more to go. You know, when you look at the estimates, there's still this expectation that inflation is going to spike and then drop off a cliff. And we just think that everything that we're seeing is leading more towards a stagflationary backdrop and not this big, let's call it deflationary cycle yet. You know, we do think we get deflation. It's just we're not necessarily calling it in 2022, but more of something that's going to happen in a 23 event. We'll also provide an update on what is happening in Ukraine, just because obviously a lot of the IMF adjustments are being blamed on the Ukrainian-Russian war. Then when we look, and we're going to talk about how bonds are really flashing a lot of warning signals. There's a lot of different pieces of, a lot of equities don't care right now. So the question is, should they care? So we want to look at what is the Fed doing, what is happening to bonds, and then what are some of the leading indicators that are starting to come out for April and May saying. Then we're going to go into the housing data. Some of the data has gotten a bit worse. It really goes back to what we said 2 months ago, which is coming to fruition right now. But it's important to appreciate that we're coming into the kind of that key buying period of spring, summer. So we want to see, do we get a bigger increase or do we stay a bit slow? Europe will be a bit short this week because we didn't get too much data, but the PPI numbers are exploding again, not surprising, and putting more pressure on the underlying economy there. And then we want to look at the Chinese data dump. So the GDP beat, but we're going to really kind of show, did it really beat, or is it just a little bit of financial magic? Because we're going to talk about retail sales, what's happening with the PBOC, what are they doing, and then some of the other inflationary pressures that we're seeing in the region, especially in India. So with that being said, we want to jump right into what is happening in Ukraine right now. One of the things that we've talked about at this point was obviously the Moskva sinking. It was obviously, if you look to Russian news, they're barely even talking about it. If they do talk about it, they're just saying that there was an accident and then there was a storm, and the accident happened during the storm, which resulted to it sinking. Has nothing to do with what the Ukrainians did. There is video evidence saying and showing the damage. So again, we know what actually happened, but that's something that we do expect to see that trigger a bigger response. Russia did test a new IBCM, the intercontinental ICBM. I had to think about that, intercontinental ballistic missile, ICBM. And again, more of a show of force, more of a warning, because they continue to be in an ongoing stalemate. And we'll talk about what are the different shifts that are happening right now. So here you can see Russian forces are continuing to amass troops around Izium in preparation for a continuing offensive. And when you look at what is happening here, you can see where they continue to try to push forward. So when you look at the supporting efforts, they've left Kyiv, they've gone through Belarus. You're seeing some additional movement back through Russia. And then coming into that main eastern effort. So one of the things that you're looking at it from the perspective, and if you can see it, it's a little tough to see, but there's 2 levels, just north of Donetsk, where they're trying to essentially connect that and solidify that eastern front. So that continues to be a big push. Mariupol, as we all have seen, they continue to hold out, but that holdout will be a difficult one, just given they're running out of ammo. They've essentially been under siege since all of this began, and they continue to fight the good fight, but it is becoming much harder, obviously, given the inability for the Ukrainians to resupply them. You can see the significant fighting here, essentially east of Odessa. The Ukrainians continue to put up a strong fight, keeping things and away from Mykolaiv, just right outside of Kherson. So again, those are some of the key pieces, and we'll talk about Kharkiv and Kherson in the next segment, in the next slide as well. So here, when you look at the assessed control, and I think it's important to look at what happened on the 18th and then the 19th. So here you can see that Russia made a push. They want to try to get Izium right here. They continue to try to solidify that, and then they're trying to move further. And this is what they want to connect. They want to close this gap. So Russian forces began a new phase of large-scale offensive operations on April 18th, likely intended to capture the entirety of Donetsk and Luhansk oblasts. So again, they want to take the whole region, because if you think about 2014 borders, the separatists had about half, and now this is a push to essentially claim the rest of it. But as we have seen in the past, what the Ukrainians are doing are letting the Russians try to push through and then hit the rear and hit the flank and try and essentially cut off supplies, and continuing to do that. And we saw that happen again on the 19th when you look at the different pieces where around Kharkiv, they continued to push back. They reclaimed territory. When you look at Churov, they have made inroads. Again, those inroads are key to cutting off supplies coming down, again, trying to come through as they continue to push around Izium, and they're trying to push forward. So they're cutting off any type of supply coming south, as well as, and then what they're going to try to do is cut them off. And then essentially what the Ukrainians will do will carve out that piece and do it piece by piece, as they've continued to do with a lot of success. And again, this is something that we continue to note. When you look at some of these different pieces, the Russian strikes have corroborated local authority statements about Russian forces in the Derhachi area. Some of the Ukrainian gains shown likely occurred before April 19th, but that's something that they're continuing to hold out as they continue to strike at the rear. Now, all of this is so important because as this continues to go, it shows the consistent stalemate that we're seeing. And now Russia tries to push forward. Ukraine, and then the Ukrainians counter. The U.S. is sending more assistance in terms of equipment. The Eastern Bloc and Europe is continuing to do the same. Those are things that are continuing to happen, which again is leading to this ongoing battle of the back and forth, creating the stalemate, and again keeping a lot of raw materials on the sidelines, a lot of food, and obviously leading to outside of loss of life that's going to happen abroad, but also the loss of life during this invasion. So here is what some of the bigger issues that we're seeing on a broader perspective. On the rice side, on the other side, so rice prices have fallen in the past year. That's something that, for those that have been watching us, we think is going to reverse, because people are going to continue to go down that. Soaring fertilizer costs have rice farmers across Asia scaling back their use, a move that threatens harvests. Again, when you look at fertilizers are used to help and support yield. And as prices have just exploded, we're seeing these yields come down, not only because of weather, but now because of just the cost of fertilizer. From India to Vietnam and the Philippines, prices of crop nutrients crucial to boosting food production have doubled or tripled. Lower fertilizer use may mean a smaller crop. The International Rice Research Institute predicts that yields could drop 10% in the next season, translating to a loss of 36 million tons of rice, or the equivalent of feeding 500 million people. Just to kind of put in perspective that number, and as you get cost of grains going down, shortage of grains going down, you're going to have an increase in rice demand, which again is going to lead to some of these different pieces. Now, just thinking about what the Ukraine means and Russia means to the international market on the exporting side, largest exporters of key grains, wheat, you can see where Russia, Ukraine are. Maize, obviously corn is where you can see Ukraine is a key component to. Barley. But as we talked about in the previous show, where people were saying, or I should say 2 weeks ago, when people were saying that, India doesn't import food. Well, they import sunflower oils, vegetable oils. And this is where, when you look at what Ukraine and Russia produce, that is what we were alluding to and talking about when you look at what India imports. And that's why they have such a huge impact on what is happening within the Asian continent and abroad, and why we talk so much about food. Now, shifting to the U.S. is not in a much better place. Corn, fairly in line, slightly below what was expected. Soybeans, same thing. Spring wheat right in line, cotton going strong, sorghum again improving. Winter wheat is the one that continues to miss by a country mile. Good to excellent. So this is one of the weakest, and we have a slide on why that's the case when you start looking at some of the different pieces. But winter wheat continues to be a huge struggle within the U.S. and what yield will look like. Now, Indian wheat typically goes to Bangladesh when you look at the top 10 exporting nations. So the reason why we talk about this is because India has seen a kind of a surprise drought, if you will, which is happening right during a key growing, or I should say maturing phase. So there is a concern that you're going to get a big drop in some of this yield, which when you look at how that interacts, Bangladesh, Sri Lanka, places that are already struggling with their own prices, this is going to take away, again, some of this key harvest, some of this key grain, which is just going to support international pricing and make it more expensive for countries to buy wheat. Now, when you look at winter wheat conditions, and this just kind of puts it into perspective on how weak the current conditions are versus yield. So typically when you look at condition index score and then final average yield, you can see that whenever you have a condition like this, the yield, or not shockingly, is much worse. So this is something that, again, there's times that this can change. If you get a big change in weather, you use a certain type of fertilizer, but obviously fertilizer prices are very elevated, costs are elevated, and this is going to put more pressure on yields going forward. And all of this is creating a wheat spread widening up across the board. Some dry growing regions in the U.S. are expected to see some precipitation over the next week. Not all areas will benefit, but again, you're starting to see some of that. Hard red winter wheat futures fell, but the most active contract for soft winter wheat also fell. But you're starting to see, again, even as you're getting some of this movement, the premium for higher protein variety rose as the drought continues to hit. The question is how much rain comes through, how much precipitation. If it's good, you're still seeing, even if it's good, you're still going to be at very elevated prices, especially when you compare it to previous years. Now, that's not the only piece that matters, because when you start looking at tin stocks, inventories have been trending lower for 2 decades, and tin is a huge component and a very important one at that when you look at semiconductors, which is something we're going to continue to talk about throughout the show, especially in segment 5 when we look at what is happening within Asia. So then when you look at Euro wheat, you can see that wheat prices continue to be at record levels. Again, it's not just the US, it's not just India, it's hitting everywhere. So not only are there issues on the wheat side, then you look, and the reason why we're talking about Europe here, Europe continues to have a shortage of semiconductors for those who have tried to buy a car or order a car or take delivery of one. Microchips continue to be one of the biggest overhangs. Now, when you look at what the IMF is saying and you start looking at some of the different contacts, central banks are on course for the biggest tightening this century. So global hikes sit at 263. And if you look at 2020, you had global cuts of 195. So you're getting, obviously you have a war going on, something that could continue to expand. You have CPI surprises, especially in emerging market inflation moving much higher, and that's obviously taking away Turkey and Russia because we all know what's happening there. So on average, emerging market inflation surprising to the upside, driving more of the tightening, driving more rates to go up, which again is also going to hurt growth, going to hurt flow, which is why we think the IMF is going to have to continue to take down their estimates. The survey in the next 12 months, the world manufacturing PMI will be, and then when you look at the diffusion index, you see that numbers above 50 indicate that the numbers are going to get better. Fully contraction mode, there's a view that contraction is only going to increase. Moody's Investor Services is showing, when you start looking at the different situations on financial availability, you're starting to see that those are tightening. And the reason why they're tightening is because yields are going up. You have pressure moving in the wrong direction with rates going up. That's obviously going to make money harder to get. And that's why you're seeing these tightening conditions across the world, which is all leading to the IMF cutting economic forecasts. So here you can see what it was in January and what it is now in April. We still think that there's more downside. Russia is obviously the biggest reversal. We think that India and China are still too high. We obviously think that Europe is going to continue to come under pressure. And the IMF now expects much higher and more persistent inflation. And that's something that I think is key, is how persistent. And when you look at the elevated side, we have to look at, well, what is the persistence? Because the quicker it kind of pairs back, the faster we can see growth and or some sort of growth. And that's why I think that we're coming into, again, that stagflationary period. Now, the persistent scarring is not surprised to, you shouldn't be surprised to see it happening in the emerging markets and the low income developed countries. That's where we continue to see the pressure points. And as we've been saying since the essentially 2020, the expectation of recovery was way too high in low income and emerging markets. And you're starting to see emerging markets coming back down, and they're kind of re-rating things lower. And that's where that pressure continues on the emerging market growth and global growth in general. That's where we continue to see a lot of these pressure points. Now, this is the inflation persists. You can see that there was always this expectation, and I want to point to the apex. When you look at the apex, you can see that the apex continues to move to the right, and then once we hit it, we have this quick drop off. Again, I don't think we get to the apex yet. Like as we said in last week's show, we haven't seen peak inflation yet. And then that drop off is really going to flatline and be much slower than what the world is expecting, what some of the IMF and other central bank and other agencies are expecting. Core inflation is very high in the emerging markets, not surprising, and it's exceeding inflation targets. So core inflation deviation from inflation target continues to trend up, which is why we expect to see emerging markets raising rates, central banks trying to get in front of it, and that's obviously going to make it more expensive to get cash, continue to bring some of this down and create some of this sluggishness. And again, that headwind into growth. And now when you look at some of the key signals. So when you look at Sweden is usually a good bellwether of where things are going, and not surprising. Swedish new orders versus inventories are moving into negative. They are now in a contractionary standpoint, which is global manufacturing PMI, kind of that leading level. Manufacturing confidence, coming down, manufacturing PMI. Again, all of these things are leading to some of that slowdown, which is then, well, maybe it's just a Swedish thing. Well, let's look at Germany. German export expectations are now negative, which is typically a leading indicator for some of that world trade. Now, South Korean is manufacturing PMI new export orders, also negative. Also, again, these are two key exporting nations that are coming down. As we showed with China, exports were negative. Imports were negative. Exports were slightly positive, but moving in the wrong direction. And here is just more confirmation on top of what we're seeing in Sweden. Now, as all of this is happening, you have global growth slowing, which is bringing down GDP. You have rates going up, yield going up in general. So debt is going to get more expensive. So when you start looking at the median gross debt and the median interest payments, we expect to see not only has debt gone up, and then you have to roll that debt, but you're going to roll it at a higher rate, which again is going to shift some of that interest payments much higher, which is why when you start looking at where the pressure is, emerging market headline inflation by region continues to surge up. Emerging market Europe, Latin America, everything continues to drive in that level, which is when you start looking at PPI manufacturing by region. Emerging markets in January, 19.7, continuing to get worse. All the while, rates are going up to try to slow this, which is then going to lead to less ability to get money, which is going to lead to more expensive interest payments, which is then going to lead to, again, more of that slowdown. All of these things become these overarching issues that become the underlying reasons why we think there's going to be more slowdowns, there's going to be more headwinds and problems that we think we have to address. And in the next segment, we're going to look more at the U.S. because the U.S. 10-year really sets the standard for where the emerging markets, because it's the spread that is set on the 10-year. 10-year continues to go up. We think it's going to be over 3% very quickly. And that is going to put more pressure on the emerging markets, but we want to talk about that in the next segment.